Hey guys, what's going on? Canal here, Bulls on Wall Street. I want to go over something that I think is a really common mistake that I see with a lot of my new students, and something that we really focus on in class is patterns are not always what they seem. And we talk about this in chat room all the time. When someone says, "This is a flag," I say, well, just because a flag looks like a flag doesn't mean it's a flag. I know that's a little bit confusing, but what I mean by that is that not all patterns, when you see them intraday as intraday traders, are that pattern, meaning that if it doesn't show up on the big picture, that pattern is not validated. And just an example of that was, yesterday in chat room, we were shorting this JNUX. I had a short at like 312. I added some at 310, and I shorted it, and it took a long time to actually crack. It was kind of just sitting there between this range at 306 and 310 for almost 2 hours. And I noticed a lot of the guys were getting impatient because it wasn't cracking, and it started to base out into what would look like a flag. And so, a lot of people say, should we get out of this short and go long? Because it's a flag. And I was explaining to everybody that just because it looks like a flag doesn't mean it's a flag. Meaning that yes, in telltale classic technical analysis, this would be your flag pole and this is a flag, but you can't long this stock because on the big picture, what it's showing is, we have something that went from $150 to $300 without rest. That's an extended overbought stock. It's essentially gone parabolic, and so those flags to the upside won't actually resolve themselves to the upside. You can't take that trade, and that's a common mistake that a lot of traders make is, they see the pattern and they just want to go out and buy it, but that's not necessarily what you're supposed to do. The big picture is supposed to give you your ideas. The big picture gives you your idea generation, and then what you're doing is using your intraday charts and your intraday analysis to really pinpoint your entries based on what you think is going to happen on your big picture, like having a thesis about a trade, essentially. And that's a very simple mistake that traders make, and something that you really have to focus on is, what's the big picture? What should a stock be doing on a multi-day basis? What is my thesis on this? And then you start going into the intraday to really make the trade. So, we ended up with a really good rip down to, 295, and it took a little bit of time, but, that flag, I wasn't worried about it. I saw that consolidation as healthy, and I was looking at it as more or less a flag that can be shorted versus something that you want to buy to the upside. And, as you can see here, this gold is just really extended. And, we're starting to get a day two drop here. I just took a little bit of a short on it a little while ago. But, huge drops again. You can see these big pushes, into them are getting faded off now because the big picture is telling you that this stock is a short. And so now you want to take your intraday patterns and align it with what you think on the big picture, meaning you look for bear flags, you short into resistance, that type of stuff. So just a quick little lesson for you guys. I hope you guys enjoy it. Feel free to leave any comments. As you guys probably know, I'm trading live in front of my students every day via screen share and video, and we talk about these trades and go over them every day. So take care and have fun. See you guys.